Hey everyone, I'm Justin Spicer from the Ohio State Legal Services Association, and I'm here with Kathy Hoover, staff attorney with the Low Income Taxpayer Clinic at the Legal Aid Society of Columbus, and Melissa Skilleter, director of the Low Income Taxpayer Clinic of Southeastern Ohio Legal Services. Today we're discussing self-employment income. Feel free to comment below and leave any questions you have, and we'll answer whatever we can. Melissa?
Hi, today we're going to talk about what it means to be self-employed and some things you should be doing if you are. This is the first in a series of live Facebook events on these topics. Today we'll talk briefly about some topics and go more in depth on those same topics in the coming weeks. For starters, what does it mean to be self-employed? Being self-employed means that you earn money by freelancing, being an independent contractor, owning your own business. You work for yourself rather than being an employee of someone else or of another company. Some examples of being self-employed are DoorDash or Instacart, driving for Uber or Lyft. Sometimes it's called working odd jobs or side jobs. Sometimes people like to say working under the table or working for cash. It can include babysitting or providing daycare in your home. The gig or cash economy are also terms that get used frequently. Sometimes people buy used items and then resell them for a profit. These are all examples that are considered to be self-employment. This does not include income from activities where you don't intend to make a profit, such as a hobby.
Did you know there are tax complications for self-employed income, and your business structure could be very important? So all income, even cash income, is taxable. You may hear some people say something like, I only have to report the income if it's over $600, or I was paid under the table, so I don't owe taxes. These statements are incorrect. The $600 limit refers to a person or company who pays income to the self-employed person. They only have to provide a 1099 to a worker if they paid them more than $600. And even if you're being paid under the table, you are still earning cash income. Nearly all income is taxable. There are very limited exceptions to income that is not being taxed. Money you earn from self-employment needs to be reported to the IRS on a tax return, and you need to track your own income. You will have to file a tax return even if you don't owe much money. You may have to pay more out of your own pocket if you're self-employed. Self-employed people not only pay the income tax on the earnings, but the self-employment tax on these earnings. The self-employment tax is a replacement for the payroll taxes that a W-2 employee and employers each pay half of. If you own your own business, you should know that setting up your business how you set your business up is important. Most people who are self-employed are sole proprietors, meaning that they work for and by yourself. A sole proprietor is a single owner who has not created a separate business identity, but you can be in a partnership with someone or set up an entity even for just yourself. An entity is a separate business identity that may include you, just you, or you and others.
Do you drive for a delivery or rideshare service? Do you track your mileage? You should be. Keeping good mileage records is very important. Some of the rideshare or delivery services provide you with a report of your mileage, but that may only be some of the mileage expenses that you can deduct or subtract from the taxes that you owe. Do you keep good track of other expenses? If you pay for and provide snacks or other things to your passengers or other types of expenses, those may be things that you can report to reduce your taxable income. And so you're going to want to track all of those expenses.
So do you keep records of your income and expenses as you work? So what is a record? It depends on how complex and what type of self-employed business you have. A record could be as simple as a log of your mileage and a listing of your income and expenses. It can also be as complex as a computer software program you can buy. Whatever system you use, you need to make sure that you keep receipts and documents to back up what you report. And if you use an electronic system, you should back it up somewhere once in a while.
Did you know that you may need to make estimated tax payments? When you're an employee, the person or company that you work for is required by law to take money out of your paycheck to be held to help you pay your income tax at the end of the year. We call that your tax withholding. The employer is also required to pay their own money towards employment taxes that pay for Social Security and Medicare. When you're self-employed, you are the employer, and you are the one responsible for making sure that both the income taxes and the employment taxes are paid as well. To make sure that you're able to pay these when they come due, the law generally requires that you make estimated tax payments towards the tax that's going to be due, and those are made every 3 months. If you don't make the payments, you can be fined by the IRS, and you may struggle to pay the tax when it comes due in April.
So do you babysit in your home? If you regularly offer babysitting services in your home with an intent to make a profit, then you have a self-employed business. You need to track all of the payments you receive so that you can report your income accurately on your tax return. But you should also keep track of your expenses so you can deduct those expenses from your income. You should keep track of food and supplies used in your business. Make sure you keep copies of all these expenses for several years in case the IRS wants to see proof of your expenses.
Do you know that if you have self-employment income, you need to file a Schedule C with your tax return? What is a Schedule C? It's a form that you fill out as part of your tax return. American workers file a Form 1040 tax return each year to report their earnings and calculate the tax that is due. When you're self-employed, you need to include a Schedule C that reports the money that you earned from self-employment and the expenses that you paid in order to earn that money. It helps you and the IRS calculate how much you actually brought in, or your net earnings, and calculate the tax that should be due on those earnings. Many tax preparers will charge an extra fee to prepare the form with your return, but many self-employed people find that they will need extra help to get it filled out correctly.
Thanks, Melissa and Kathy, and thanks to everyone for listening. As you can see, being self-employed has a big impact on your taxes, and there are a lot of things to learn. So as a reminder, this is the first in a series of tax chat segments on self-employment. In the coming weeks, we'll cover topics like keeping and gathering records for next year, tracking mileage for rideshare and delivery services like Uber, Lyft, and DoorDash, and everything you need to know about estimated taxes. And for our next self-employment segment, join us on September 2nd as we talk more about business structure and how they'll affect your taxes. And as another reminder, the video of this session and all the others in our tax chat series are available on our Facebook page. Thanks everyone for joining us, and we'll see you on September 2nd.